Welcome to Atcons, the easiest way to explore your journey of investing in stock market. Most of the trading in the Indian stock market takes place on its two stock exchanges. 1. Bombay Stock Exchange BSE. 2. National Stock Exchange NSE. Bombay Stock Exchange BSE. The Bombay Stock Exchange is the oldest stock exchange in Asia. It traces its history to the 1850s when stockbrokers would gather under banyan trees in front of Mumbai's town hall. The location of these meetings changed many times as the number of brokers constantly increased. The group eventually moved to Dalal Street in 1874 and in 1875 became an official organization known as the Native Share and Stockbrokers Association. In 1956, the BSE became the first stock exchange to be recognized by the Indian government under the Securities Contracts Regulation Act. The Bombay Stock Exchange developed the BSE Sensex in 1986, giving the BSE a means to measure overall performance of the exchange. In 2000, the BSE used this index to open its derivatives market, trading Sensex futures contracts. The development of Sensex options along with equity derivatives followed in 2001 and 2002, expanding the BSE's trading platform. Historically an open cry floor trading exchange, the Bombay Stock Exchange switched to an electronic trading system in 1995. It took the exchange only 50 days to make this transition. Sensex calculation. The formula for calculating the Sensex is equal to sum of free flow market cap of 30 benchmark stocks into index factor. Index factor is equal to 100 upon market cap value in 1978-79, where 100 is the index value during 1978-79. National Stock Exchange of India NSE. Capital market reforms in India and the launch of the Securities and Exchange Board of India Sebi accelerated the incorporation of the second Indian stock exchange called the National Stock Exchange NSE in 1992. After a few years of operations, the NSE has become the largest stock exchange in India. Three segments of the NSE trading platform were established one after another. The wholesale debt market WDM commenced operations in June 1994 and the capital market CM segment was opened at the end of 1994. Finally, the futures and options segment began operating in 2000. Today, the NSE takes the 14th position in the top 40 futures exchanges in the world. In 1996, the National Stock Exchange of India launched S&P CNX Nifty and CNX Junior indices that make up 100 most liquid stocks in India. CNX Nifty is a diversified index of 50 stocks from 25 different economy sectors. The indices are owned and managed by India Index Services and Products Limited IISL that has a consulting and licensing agreement with Standard and Poor's. In 1998, the National Stock Exchange of India launched its website and was the first exchange in India that started trading stock on the internet in 2000. The stock market has two interdependent segments: the primary new issues market and the secondary market. The primary market provides the channel for sale of new securities, while the secondary market deals in securities previously issued. Sebi, Securities and Exchange Board of India. Sebi is the regulator for the securities market in India. Originally set up by the Government of India in 1988, it acquired statutory form in 1992 with SEBI Act 1992 being passed by the Indian Parliament. Sebi has to be responsive to the needs of three groups which constitute the market: the issuers of securities, the investors, the market intermediaries. Sebi has three functions rolled into one body: quasi-legislative, quasi-judicial, and quasi-executive. It drafts regulations in its legislative capacity. It conducts investigation and enforcement action in its executive function, and it passes rulings and orders in its judicial capacity. Though this makes it very powerful, there is an appeals process to create accountability. Sebi has enjoyed success as a regulator by pushing systematic reforms aggressively and successively. Example, the quick movement towards making the markets electronic and paperless rolling settlement on T+2 basis. Sebi has been active in setting up the regulations as required under law. Sebi has also been instrumental in taking quick and effective steps in light of the global meltdown and the Satyam fiasco. It had increased the extent and quantity of disclosures to be made by Indian corporate promoters. More recently, in light of the global meltdown, it liberalized the takeover code to facilitate investments by removing regulatory structures. I hope you liked the video. See you in the next video. Keep practicing, keep learning, keep growing.